All right, all right. Good morning, everybody. Hope you guys having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys had a great day yesterday, as we did see a little bit of movement, rallying up after the preposterous Netflix earnings. We saw a little bit of a rally higher. So we are live today over on YouTube. So if you are on YouTube and you're watching us live, please do me a favor. Make sure that you use the chat window, asking questions, typing in anything that you have. I know there's not a whole lot of you on as of yet. I didn't pre-announce this or anything. I just figured it's easier to go live than to do the rendering and recording a video and all that fun jazz. So let's go ahead and dive in. S&P this morning, we're up 37.5 points. We are rallying hard, but really not a big surprise. You know, yesterday, about 1 o'clock, we fell into a quality area of demand, which was identified in our session. We dropped down into that level and then got a really nice move away. So hopefully some of you that were in our live trade room yesterday were able to take advantage of some of this move. Now, this was the level that Herman Casas went over in our live trade room at 8:30 Eastern time and identified that as a potential turning point. We also looked at this level in the daily market commentary. And so now when I look at this, I'm going to remove those two levels. I'm going to look a bit higher, and I'm going to come to, clearly this could serve as a little 15-minute reversal point because old resistance oftentimes acts as new support. That's right there after the European markets open. So this to me is a bit of a level on top of a level where I've got two levels stacked up, and each level does have some validity to it. Good morning, Sava. Welcome aboard. I'm going to take this first level and make it a confirmation, and the second level will be a limit entry. And that's the best way to trade those when I've got levels stacked on top of one another. But we are up about 38 points this morning. I wouldn't be surprised to see us pull back a little bit into here and then continue to rally higher. Now, our 4-hour trend, we do have higher swing highs, higher swing lows. So anything above us has to flip over to a confirmation entry. Okay, so anything above us has to be a confirmation entry when looking at potential shorts. So when I move over to the 1-hour chart, and remember, the way we identify those areas of supply is that we look at current price, we look to the left and up to find areas where we may see movement. That's not the right drawing tool because that looks like a 2-year-old drew it. I look to the left and then up to find what's the origin of a strong drop in price. Now, certainly this would be an area that you might say, well, it's higher than current price, and it's the origin of a strong move. But is it truly the origin? Well, it's certainly a big move down, but I think that is a level that's been retested a number of times, and all of this happens to be retests of each other. So as I look further to the left, I would come to this area right up in here. Oops, wrong drawing tool again. I would come to this area right up in here because this is above current price, and we'd have to rally up to get there. The downside of this level up here is that we've already touched that area, right? And so if I were just to wrap my zone around that level, that was a very effective level that we already have taken shorts off of, that price already has moved away. And so while this is an effective level, because you can see that over here to the left, we've bounced off it a couple of times, it is not what we would consider a fresh, untouched level. It's a level that's already been hit. And so at this point, I'd have to make it a confirmation entry, but even that, it's still going against the trend, right? It's still going against the trend. And so the best this could score would be a 7 out of 10 on our trade operation plan, as it currently states. And so while that level exists, it is not a high quality entry opportunity. So what I'm basically saying here is that we have a lot of room for price to continue to rally higher. Now, our first clue to markets potentially rallying higher was the fact that the Russell has been leading us to the upside recently. And so the Russell would be the market for me to pay the most attention to, which would be this area right down in here on a bit of a retest. I think that would be your best level here on the rut. Now, that rut on a 4-hour chart, we do have higher swing highs, higher swing lows. We're sitting right at this little wick over wick area of supply. And this little wick over wick area of supply is one that I want to pay attention to, but we're basing in front of the level. And by basing here in front of that level, it makes it that much less probable of an opportunity. And so plenty of room to run higher on the Russell 2000 as well. Looking at the NASDAQ today, we've got NASDAQ is moving up pretty hard on after hours earnings with Tesla yesterday. Big move higher. We certainly had the sell-off early in the morning yesterday once the market opened up off of the Netflix move. Came into this confirmation level, poked a little bit through it, didn't quite make it down to our limit entry, but certainly hit our breakout level. And now this is a really strong area for a breakout right there at 14,302. If we get basing in here, that is a quality breakout level, if indeed that level does show itself. Now, looking at this on a daily chart, we can see that we had a little bit of a reversal candle yesterday, putting in a little bit of a bounce for price to potentially move higher. But we certainly still have to get above this 14,302 for us to really go anywhere, right? We got to get above this 14,302. So if you get above this 14,302, then I think you've got room to run a bit higher in the NASDAQ. As far as a reversal goes in the NASDAQ, if we get a pullback this morning, there's not a lot of great pullback opportunities in the NASDAQ, as clear as there are in the other markets. So those are three of our four major markets as far as what I'm looking at for today. Looking at the Dow Jones, if we want to add that into our morning observation, we did retest this level yesterday, got a nice move away. Hopefully some of you are able to pick that up and get a little cheddar. If you didn't, we got a breakout trade with quality basing in front of the level, and it is starting to move. So a couple of good opportunities for a long met entry criteria in the Dow. And if you missed it, I would say that your next opportunity would be on a pullback into this region right here. All right, looking at energies and metals, specifically crude oil and gold. Starting first with crude. Now, I will say I anticipated that we would get a better breakout here in crude, and unfortunately, we did not. We broke out down. 1, 2, 3, 4, 5, 6 candles later, the market basically said, "Hey, listen, close this thing out. We're not going anywhere. It's been 6 candles. Remember our 6 candle rule. It did give us an entry on the breakout, but 6 candles later, you're still sitting at a break-even trade. So the best opportunity there is close that thing out, walk away. I still think the better chance is that we will continue to break out to the downside, but I don't have as clean of an entry now as I did in a prior setup. So if you want to go short now, I would say that you'd want to use maybe the 15-minute chart and get short below 102.70 with your stop above the most recent pivot. I do have a couple of touches here that would make this a lower risk breakout entry and still an opportunity to get short. Gold yesterday hit our supply level and moved away nicely. This was the level that we had talked about in the DMC. We got a little bit of a move away from that zone. We hit it again and have continued to move away. So if you're still in it, great. Take your stop, move it to break even. At this point, we've gotten a nice 2-to-1 move. If you're not in that position, then how do you re-engage? Well, re-engage on a smaller time period. Let's move to a 15-minute chart. Oh, that's so pretty right there. That little noisy cricket level right there. I love those levels. Little wick over wick zone that was touched over here to the left. We've moved away. Old support acting as new resistance. Like those are the kind of levels that I really, really like the setup for. Your stop certainly still has to go up above the wick of the leg-in candle. But that, I think, is a really good setup for gold if we can make it back up into that region. I'm not sure we're going to make it back up into that region today, as we are, already in a, I don't want to call it a free fall, but we're already falling pretty hard. And as I look at this level to the left, I don't have a lot of quality supply in front of that. So what you'd be better off doing is saying, okay, where is there a chance to re-engage this big picture downtrend on some sort of a basing opportunity? And I just don't have that as of yet. Natural gas, we talked about yesterday, the fact that I could see natural gas breaking down. And we did not get quality basing to give us an entry for a breakdown, unfortunately. We definitely broke down, but there was no quality basing. So if you took the entry, maybe you made a little bit of money on it, but in reality, it did not fit our breakdown trade criteria. And so I don't really love that as an entry. If you took it, you got a little bit lucky, but following the rules, you would have not taken that position because it didn't give me quality basing in front of the zone. Now, looking at this on a 15-minute chart, you've got a really, really wide area right here. I don't love this area just due to the width of this level on a 15-minute time period. Your stop is pretty wide based to the relative movement that you would achieve on that. And so I would think you're better off just waiting for a breakdown below these lows if indeed we get quality basing yet again. One of them that we looked at yesterday was the Japanese yen. Let's go find that yen trade. And I will say that while the yen had been really close to getting in, it did not quite give us the entry all the way up that I was looking for yesterday. But it does now set up for the next breakdown opportunity in the Japanese yen. And the yen has been something we've been looking at breakdowns now for a number of weeks or even months at this point, as it's just continuing in a very precipitous downtrend. And so we're looking to get short on breakdowns when breakdowns set themselves up. And that could be the next setup, could be right around here. So keep an eye out for low, some narrow range basing somewhere inside of that level. Australian dollar, little bit of a double top was just put in. So potentially, a breakdown out of that level, nothing really to write home about at the moment. Great British pound, we got a gap fill trade, got a little move away, hit it again, got another move away, we hit it again and poked through it, right? So you may have taken a little bit of coin off of that move. In reality, not a whole lot of a great setup in there. And our 4-hour chart tells us you should probably stay away from this, okay? This is not a great setup. 4-hour chart isn't really giving me a lot of great opportunities and a lot of great things to look at. So those are some of the levels that I'm looking at for today as we head into Thursday's hump day trading. Bond markets, meh, right? I mean, I'm getting very meh in this bond market arena as we need to be very aware of Fed announcements and what the Fed's going to have to say. I still say that you're better off in the bonds. This level here scares me just a bit from a demand standpoint. I think that, continuing with a hawkish Fed should continue to drive these bond prices a bit lower. And so just keep those areas in mind as well moving forward. Now, today, I am delivering the options live trade room, 11 o'clock Central Time. So if you want to join the options live trade room, I look forward to having you there. We're going to go over some individual options positions. If you're not a TradersArmy.com member, why not? Go to TradersArmy.com. You can become a member. Use promo code TRADER60 to get 60% off your first month. We look forward to having you on board. Until tomorrow, everybody, I will talk to you soon. See ya.